Hello, traders. This is not Blake Morrow. This is Stelios, and I'm going to be starting. I'm going to be kicking off this webinar. Blake is away for a few minutes. He's going to be joining us in a little while. So, where do we start? Tuesday today, and it's living up to its nickname, Turnaround Tuesday, so far. Can I just check? Can everybody hear me? Yeah. Okay. Let me check. Blake, new voice. Yes, you can hear me. Great. Thank you. So today's move, clearly a risk-off move in pretty much everything. The S&P is something that we've all been looking at, and I know Blake's mentioned it before. These previous highs have now been broken, and really it's this trend line on the daily chart that's getting, I think it's around 3,800. If this gets broken, then we're getting into serious issues, because what interests me more is actually the Nasdaq, and the Nasdaq has already broken that. We are again close to some kind of support here in the 12,800, somewhere there. So these two levels, the 3,800 in the S&P and around 1280, 12,800 in the Nasdaq, I think they're very important. And we have Powell speaking today, and we've said this again and again. We don't think there's any reason for him to be anything but dovish. But the risk, what is the risk? The risk is, like Blake said on Face a little while ago, that he says something, a word, a phrase, something that spooks the market. And the new normal, I know, is low rates, QE forever, so stocks go up forever. Well, that didn't used to be the case, but this is the new normal. So if we deviate from that at all, then we're going to be at risk of a proper correction in equities. I know I sound crazy when I say that, but it is very overdue, and there's a lot of things that are pointing towards that. And one of these is yields. We've been talking about yields as well for a while, and we said that the 10-year US is now in a pretty important zone, 135 to like 148, 150. We're climbing into it. If we, it's not that far. If we break through that, then stocks are definitely, or theoretically, should definitely go a lot lower. But I feel something's brewing here. A lot of things are happening, and tech stocks are the ones leading the way down this time. Remember, they were leading the way up from COVID onwards. So you have stocks like Tesla, and okay, obviously Tesla is a car manufacturer, but they sell themselves as a tech stock, and all the other tech stocks, I mean, they're not doing well now. So I think we have to be very careful. And the buy the dip mentality has been working for years, but it works until it stops working. Having said all that, in the medium term, I think equity indices are going a lot higher. So any major retracement lower, I think, is a buying opportunity. Now, currencies. The dollar. I've been talking about this for a while. This is what I see for the DXY. This will coincide with the risk-off move. If we don't get risk-off, then this will probably not manifest itself, and we're just going to keep going lower in the dollar. But I do think we can get a nice little bounce, which we've seen how things go. It can get quite vicious. It can be quite sudden. And it is quite possible, in my opinion, that we might see something like 96, which is a nice confidence here on the DXY. Again, it's not a sure thing, but I think the chances are now a little bit in favor of a dollar spike. And we wait for Powell today to, maybe give us something, maybe not. We'll see how it goes. Metals is one thing. Another thing I've been looking at for quite a while. And you know me, I'm very bullish in the medium term. And look at this lovely flag, a bull flag that gold is posting. And I would love to get a risk-off move because we know metals get carried with risk lower. And, if we can get gold to retest this lower trend line, 1700, we could even do a break below for a little bit. I'll be looking to buy here in the 1700s. And, this flag, if you extend this move, it's pointing towards something like 3,000, I think. So it's not, it's something that I think will manifest itself. It's just a matter of getting the best possible entry, in my opinion. And the same with silver. Silver has been a little bit more resilient. So although gold has been, the flag is very pronounced, is going lower, silver is going pretty sideways for the past few months. And there is a trend line if we go to the daily. I'm already long silver and I want to add more. There's a trend line that if we get near there, which is right 26-ish, I'm going to add more. And, if we get lower, I'm going to add a lot more. So that's, I think these are all tied with the equities and with the dollar. They have been. And shorter moves in equities are going to drive these as well. The flavor of, hey. So I was just going to mention cryptos as well, very quickly.
Do it.
And Bitcoin 40,000, I think, is the level really where we, if you're bullish, I think that's a very nice level, 42,000 to start getting longs. But you know me, I don't believe in cryptos in the long term. So if as a speculative play, no, that's probably not a bad place to start. But I'm not touching them myself.
Yeah, that's where I'm at. Actually, 42,000 is kind of the level that I'm watching, right?
Yeah.
That's going to be it for me. So
yeah.
How's it going?
Good. Very good.
Good.
Yeah. Same old, just trying to figure out what the markets are going to do next and what Powell can give us today. That's the main thing. If he can give us something new.
That's what everybody's waiting for, right? So I'm trying not to be too over zealous with what's going on right now. I'm just trying to be more patient. I was here. I'll take over, and I know you're going to get over to the other webinar that we've got going on. And by the way, guys, we're just kind of fumbling around a little bit today because Steve is out. Steve's going to be out for the week, and so we're just kind of we had made a prior commitment. So can you see my screen still?
Yep.
The Aussie dollar and everything. Okay. So yeah, we made a prior commitment and we thought Steve was going to be here. He's not here. So we had to kind of fill in, and still just has to go run to the other event. And it's nothing big. You guys, this is the place to be, just so you guys know. I mean, this is where I'd rather be, but it was a commitment that we made. And we're like, okay. And then Steve won't be here for the remainder of the week, but that's all right.
Okay, I'm gonna shoot off to the other one, and I'll see you in a little while. Okay.
Sounds good, my friend. And you know what? I'm gonna do the bias chart, wrap up with a few questions here, and then jump in the chat room. So
okay, great.
We'll see. You don't have to come back here. I'll take care of it from here.
Thank you, Blake. Thank you.
Thanks, man. Have a great one.
You too.
All right. All right, guys. So Amira asked for platinum. So you know what? I'll take a look at platinum really quick before I get started. You guys probably already heard me on the face webinar, so I don't need to rehash everything that I was discussing on there. But I'll tell you, platinum. Nice move higher. You know what? I would be at this point. Let's see, this is a weekly chart. So let me do something really fast. It's nice and bullish. Let me see if we cleared some fibs. Okay. Yeah, I mean, hell, I know you've been playing it on the long side. I think while you're above here, above 1200, basically, you got to just stay bullish while you're above this level. But you get below here, then you got to be a little careful because, see, this is a 38% retracement. We're kind of probing it. It should go higher, but I'm looking at a weekly chart. So, I mean, I would be thinking something like this. And then, worst case scenario is, you get some really big sell-off and risk, and then you get a much deeper correction. But I think you got to be a buyer at dips. I think that's it. Okay. All right. So let's talk a little bit about, we'll start off with crypto because that's where Stelios was just talking last. And I think you guys know my stance here with Bitcoin. Hey, as long as we're above 42,000, it's fine. This is the breakout point. It's below 42,000. That's when you start getting a little bit more of significant selling. Oh, hold on really quick. Sorry. So I think cryptocurrency, while we're above 42,000, it's fine. You get below 42,000, then it becomes a bit more of a risk off type of situation, in my opinion. That's when you start to think, okay, this pullback could be a little bit more aggressive than I had anticipated. And, obviously while we're above 20,000, you just have to be buying on dips, but I'm talking near term. This is where it starts to sour sentiment. And if it starts to sour sentiment, it's going to bleed over into other markets. So, 42,000 is going to be this is the big kahuna. This is the big support. Stelia said 40,000. Yeah, 42,000. I think 42,000, but somewhere in that neighborhood, you're going to have to start getting a little concerned. Now, I was just thinking, yesterday, last night when we were, trading back up at 52,000, I was thinking to myself, I'm like, this shook out a lot of weak hands. I think that might have been it. But, today, seeing it below that spike low from yesterday, that concerns me from a price action standpoint. The fact that it is weaker today than it was yesterday during that spike low, that's first of all lower lows, but that's telling me that there are sellers around at these levels. So it's not just one way price action anymore. Okay, so support today, you can see this low here comes right by the 50% retracement. I'm going to write down 43,400. I guess that's it. That's probably it, right? Oops. Okay. It's still bullish while we're above 42,000, in my opinion. But resistance now, I mean, you got to think, if you bought Bitcoin yesterday, like there's a couple people in our chat room buying it yesterday. Now, I'm not saying that they're still holding. I'm just saying that was the attitude yesterday. Oh, I'm going to buy this dip. But not everybody's a trader. If you're at home, or you're, let's say, you work a normal job, you're, a dentist, or you're a bus driver, and you saw the dip in crypto yesterday down to below 50,000, you bought some, right? You're like, yeah, this is a great price. I'm going to buy some. Today you're going, and if you still own it, because you're like, I'm an investor. I'm going to hold on for dear life. Hodler. I'm going to, HODL it. You could be like, oh, well, I don't like it that we're below the prices that I bought it yesterday. So now you have to start thinking that resistance is going to be sticky, right? Like yesterday, I was right. I was telling everybody in the chat room and during the daily roundup, hey, this is going to be pretty key resistance back up here at 54,000. Well, that's going to be really key today. We make it back up there, I think you're going to find a lot of sellers now. Okay. So Dimitri said maybe it's just AB equals CD. Could be, could be a simple A, B, C, D move. Sure. Maybe that was it. But that's it. But where does it take us to now? My opinion is A, B, C, D. Now the move up to here is going to be a sell, if I had to guess, if we even make it that high. So yeah, if you didn't catch the D at the very bottom, then you're that's it. You missed it. That trade's over already, though, in my opinion. Okay, let's go into things that, in my opinion, matter a little bit more. S&P. Actually, I should take that back. S&P is at the 38% retracement. That's important. We just opened. I got to get through this analysis. 50% retracement's next. So that comes in at 38.12. Remember, we are trying to play a head and shoulder pattern now. I mean, if you're long, you have to think about that. Look at how weak the dollar is. The dollar is so weak. That's because no one expects Powell to be hawkish today. I mean, that's just bottom line, right? No one's expecting it. All right, 38.12 is next support for the S&P. We're bullish. I know you're thinking, well, Blake, we're below that neckline right now. We're below 38.70. We are, but I want to see a daily close below here. How many times have we said, oh, look, it's bearish, and then we end up being higher by the end of the day and get a false breakdown, right? This could end up being a false breakdown if we close back above 39,000, or 3,900. So just, don't get too bearish down here. I think it's looking weak, but resistance today is going to be back at 3,900, or 3,900. Okay. Let's go into currency. So the euro dollar may have given us a false breakout today. This is the neckline of the inverted head and shoulder pattern. And now it could be like this too. I thought it was more of a, complex head and shoulder pattern, but I've been bringing up that neckline for a while now. So, maybe it is here, but the thing is we did get a false breakout overnight. That's kind of concerning, right? So that means those highs are going to be important. That comes in at 121.80 today. I have to keep us on range right now because we haven't broken out. So support is going to be yesterday's spike low down here at 120.90. Okay, cable, bullish, but we're at the 127% extension. It's the tweet that I did today. I still think you got to remain bullish because it is a breakout. But there's your channel, right? So 141, I would even go like above 141, like 141.10. But 141, it's bullish. But I want to show you something else, and this is where this is where we give you a little bit of an edge because I want you to think about this really quick. Okay. Support today is going to be this channel support, which comes in at 139.60. Okay. Because you're thinking, okay, I see the pound's bullish, and I know it's up against resistance, but is it really going to come down? Why could it really come down? Well, first of all, if stocks do sell off, which, by the way, look at Tesla and look at Apple today, and look at the NASDAQ. They're selling off. If we go into a risk aversion type of mode, the pound tends to underperform the euro. Look at the pound dollar and look at the weekly chart here in the euro pound, euro sterling. We're at weekly trendline support from the lows in 2015. We're there, right there. I'm not saying that we can't break down. I'm just saying that if that's a multi-year trendline support and we're on it, dude, there's a risk that the euro pound bounces or the sterling sells off. So that is why you have to be really careful being on the long side of the cable right now. Do I think it's a good short? If you want to take a small position and put it in a counter trend trade and put your stops right above the highs, you could do that, but I'd rather just buy dips. Okay, here's the Aussie. Now the Aussie is going to be the ultimate slingshot trade if we close back below 78.20. Why? And why am I looking at it? Because copper is so extreme right now. And if it pulls back with risk, it's going to pull down the Aussie. You got everybody long the Aussie this week. You got all of the shorts squeezed out. So really, really key support for the Aussie dollar is going to be, well, we have 72 or 78.50 and then 78.20. So I'm going to write down both those numbers. It is bullish right now, 78.20, 78.50. It's bullish. Resistance, 79.35. Okay. Kiwi. I've had a short on the Kiwi since yesterday, and I'm literally down like 10 pips. I'm just sitting in it. Thing will not move higher. So 73.40 is resistance, 73.45 is resistance. Is it bullish? Yeah, I don't want to even put it on bullish just yet. You know, by the end of the day, if we can really close, maybe on the highs or something, but man, it's struggling, right? Support is 72.70. Dollar Canadian. Dollar Canadian. Channel support, channel resistance. Remember, Macklin's speaking today, right at the same time as Powell. So keep that in mind. Just keep it on the radar. So support is going to be this channel support, or broken trend line support. It's 127% extension of this move. That all comes in at 125.70. That's key support, actually. 125.70 key support. Resistance right now is right here at 126.55. 126.55. 126.55. And we're going to have to keep it in range for now. Dollar Swiss above 90 cents. What? The reason why that's a big deal? That is a trend line's been broken since, post-COVID. And with yields rallying, the risk is the dollar starts to rally against some of the, dollar yen. You can see the dollar yen's already been moving. Dollar Swiss, there's a risk that these really start spiking higher. So, especially if the dollar starts to recover. Key resistance is at 90.25. We break above 90. We break above this 90.25 or 90.50, and it becomes bullish. It goes from being in a range to bullish. I know it sounds crazy, but it can happen. I was saying a little bit earlier on the Face webinar, whatever you think can't happen can in the markets. That is for sure. Support is going to be 89.40. Dollar yen, very similar to the Swissy. You can see, we're above, this trend line already, where I think the Swissy is eventually going. Dollar yen right now looks like maybe it looks something like that. It's hard to say. Let me do this really quick. That doesn't seem right. So let's pay attention to this resistance up here at 105. Well, it's these previous highs too, right? So I'm just going to say 105.70. That's resistance today. It's not great resistance, but 105.70 is. Support's going to be at 105. I know 105.10 is the 618. We dropped below 105 to 104.90. So I'm going to call it in between at 105, just as being around there. 105 is going to be support. US dollar, Norwegian krona. As you guys know, oh man, equities are just getting slapped right now. Slapped. Okay. 844, 855. That's it. That's all we need to know. 844, 855. And this is key resistance, because we break that, then you turn bullish. It's in a range, but then you have this inverted head and shoulder pattern. You're above this multi-month trend line, you know, above. This is where everything turns bullish for the US dollar, Norwegian krona. Okay. Not saying that it's going to happen. I'm just saying, I just need to point it out. Let me do this. Give me 1 second. Hold on, guys. Wow, man. NASDAQ is just bearish here. Okay. I just took off my, I had a Dow short. I just wanted to cover that really quick ahead of Powell. Oh, wait a second. Is that that's the Russell? Oh, this is channel support. Look how key that is. That's real. The Russell's really been one of the leaders too in this rally. You know, think about that. Okay. Got to wait for Powell. Got to wait for Powell. Got to keep trying to tell myself that. Got to wait for Powell. Got to wait for Powell. That's why I just want to take things off as far as my stock market exposure. Okay, where was that? US dollar, Norwegian krona, US dollar, Mexican peso. It looks like the dollar mex is just consolidating. I thought we might be breaking a little triangle, but I think it's just going to be a consolidation. But just note that 2085, above that, we start really squeezing. Then it gets really busy. This is very key. It's already bullish. And why do I say that? Because we are below, or above, excuse me, the broken multi-month trend line. You know, we're already above it. I mean, we're already bullish, but it turns uber bullish above, you know, 2085. That's where it turns really, really bullish. Okay. Support. I know anybody who's short the dollar max right now is scared. They've got to be. They've got to be. So support right now is going to be 2050. As a matter of fact, what I need here is I need this 2059. It's a pretty key support. Bulls need for that to retain. Dollar yen. Oh, we already talked about the dollar yen. We already got it. Yep. Okay. Dollar index. Holding. We've dropped below the 618. We've dropped below 90 cents. May have stopped out all the shorts or all the longs. So now 90 cents is key. It's a previous neckline of the inverted head and shoulder pattern, by the way. Oh, no, I'm sorry. Oh, yeah, of this little one. That was just a resistance. I mean, you know, we have to break 90.55 just to get to stop. Excuse me, to stop making lower lows, right? So, or lower highs. We need to get above that. Sorry, I've been talking for like 45 minutes, so it seems like straight. Okay. Gold and silver, last but not least. You guys want a good clue on what to do with the dollar today? Watch gold and silver. I think gold and gold, the dollar and precious metals. Okay. The move in precious metals will mimic inversely the dollar. So just know that. Okay. So gold resistance, 38% retracement. I know we probably wrote that down yesterday. 1836. Yep. So 38%. 1836 support. 1790, right? We are in a range. Silver. So I'm gonna get rid of that for now. That's a pretty big rejection off of this previous support, 618 retracement. So 2845 is resistance. I'm just trying to figure out where dips are going to be supported. I think around the 2650, but I'm going to write down 2650, and then resistance at being 2845. Okay. And I think we just have to keep it in range. All right. There you go. The bias chart is finished. Now, I'm going to see. Oh, I told Stelios that we're done. Amira asked, when is Pal speaking today? Pal is speaking literally in about, he starts in about 13 minutes. So I got to get over to the chat room. You guys, oh my gosh, I had a yawn. I'm so sorry. I'm going to get over to the chat room. I want to thank you all for being here with me today. Good luck today. It's going to be, you know, I don't want to say good luck, you're going to need it. No, it's just good luck, because I think we're going to get some volatility. We're already seeing it. You know, you're getting a lot of longs getting stopped out. Watch cryptos today. Watch cryptos. Watch, you know, the dollar. Matter of fact, I'm going to take my net. I'm going to take if you guys I'm taking my gosh dang it. It's ridiculous. All right, I gotta run. Guys, I'm trying to do something here. It's just not working. Okay. All right. I'm gonna close out my Kiwi short just to take it off. Okay. I did that just now. You guys have a great one. Thanks everybody for being with me. I'll see you on the daily roundup. You guys are awesomeness. Talk to you soon.